Joining me with analysis, we have the founder and publisher of the Bullseye Brief newsletter, Adam Johnson. We have Belpointe chief strategist Dave Nelson with us right now. Again, I look at a market that is just barely off the highs of this session, Adam Johnson. And what are you attributing all this upside to?
Earnings and employment, the two E's. It's been the story. It's still the story. That'll take us to 24,000, Trish. Tax reform gets us to 25,000. That's the story.
Wow. 25 on tax
25.
reform?
Yep. That's only about another 5-6% from here. We can get that because, remember, tax reform will actually add 5 to 6%, possibly even 8% to earnings in the S&P 500. And that's not just the first year they pass it. That's every year.
All right.
So
I want to point out for the viewer, Adam Johnson rightly called 23,000 in this market. I would say days after the president was elected.
Yes.
You were on that, and you said 23,000. It's possible this year. You're now saying 25,000 if tax cuts get through. David, you agree with that?
I think the tax cuts are already in, and I think you saw the tenor of the markets change in September when tax reform started to make its way back into the news cycle. So I think it's great news that we're hopefully on track for this, but you know, right now we got a legislative goose egg. I need to see legislation. I need to see something on the president's desk that he actually signs, because if we don't get that, there's going to be some give back here, and I say 24.75 in the S&P would be a good place to start.
All right. Well, this is interesting. We've got a little bit of a debate going on because Adam thinks that, you know what, the economy has improved enough, that the fundamentals are strong enough right now that you could sustain this level of 23K plus even if you don't get tax cuts through. So tax cuts, in your view, Adam, I know are gravy, but give me some meat, if you would, to understand why you think fundamentally we're in a better place.
Well, let me put it to you this way. We've got earnings growth of somewhere between 8 and 10%. Earlier in the year, it was actually a little higher. It was about 12 to 13. But now we've got about 8 to 10% just because the comps versus last year are getting harder. 8 to 10% growth. That's very real. We also have accelerating wages out there in the real world on Main Street, away from Wall Street. And if you look at the most recent data on jobs, in fact, we had people getting paid 2.9% more than last year. Trish, that's the highest rate of increase in about 10 years. When people earn more, they spend more, and that's good for corporate earnings.
You know, I would just add to that there is a sentiment out there that I think is in a very different place than, David, it has been previously. And regardless of where you are politically, I think it's fair to say that people are more optimistic about the economy. And you see this in the consumer confidence numbers. You see this in the consumer sentiment numbers. And you see this in CEOs' willingness to go out and spend right now and to invest a little bit more because there's a sense that there will be some payback.
Look, that's certainly a very fair argument, and it's very clear that that's probably the best thing the president has brought to the table here. Consumer confidence is high. Business confidence is probably at an all-time high, and I would agree with Adam with regards to we're experiencing geosynchronous growth around the world. That's not just good for our neighbors. It's great for U.S. multinationals right here in this country because that means our customers are doing well. However, a lot of that is priced in the market. We're going up on the rhetoric that tax reform is going to make its way through. But right now you got the Senate side of the bill with a $1.5 trillion deficit in there. And on the House side of the bill, they're pushing for, you know, revenue neutral. They both have to sign the same document. I have to see something signed.
I guess that's what it's going to come down. You know, historically, there are a lot of Republicans that don't like the idea of not being able to pay for this, right? I mean, even if you go with the premise, and Adam, I know you can add to this given your economics background, but if you go with the premise that you got to spend a little to make a little, that's where you get the idea of tax cuts in. In other words, if we cut taxes, we encourage more prosperity and unleashes a certain amount of prosperity in the economy, and that is all very good for GDP, et cetera. And you saw this in the Reagan years. He cut taxes. It resulted in higher GDP growth. But there are a lot of conservatives, and, you know, maybe Bob Corker, I don't know, fits in this camp where they're going to say, you know, I'm not so sure about this. This makes me nervous. I don't know if we can continue on this trajectory of spend, spend, spend.
Well, first of all,
and tax cuts they see as a spend.
Yes, they do. First of all, on Bob Corker, look, we're just watching another episode of The Apprentice, and we know who always wins that one. So that's my 2 cents on Mr. Corker. As for what you're getting at, the notion that tax cuts increase growth, yeah, absolutely. It's called dynamic scoring. And right now, the Senate, it's called, this is really quirky stuff, the Senate parliamentarian who basically writes the rules on whether you can let dynamic scoring be used into the calculation, says, no, we're not going to let you do that. You got to be conservative. But Trish, you know as well as I do, because Ronald Reagan was very successful at this, lowering tax cuts and increasing revenue into the federal government. You got to figure that into it.
And you've heard me say this before as well, Adam. This does not need to be political. JFK cut taxes, everyone.
God bless
In other words, he understood the value of letting people keep what they earn, letting companies keep more of what they earn. And Adam Johnson saying that earnings will look better because companies will have stronger earnings as a result of a lower tax rate, maybe 20%.
You know, people work hard, Trish, to make the money, so you may as well let them keep it, and then they go spend it themselves.
Adam,
Trish,
Dave, okay, final thoughts, and then I want to get to line 10.
But it is political. You got 4 obstacles. You got Senator Rand Paul, you got Senator John McCain, Susan Collins, and now you've got Bob Corker. We can't lose any of those people right now.
Yeah, so you think Rand Paul is going to join the Corker camp?
I'll believe it when he votes for it. You know, given what happened in health care, we don't have the vote yet.
I think it's going to be hard. I mean, and if you're Senator McCain, I mean, to go down in history as being against this tax reform may not be where you want to be, given that
he walked away from health care, Trish.
Campaigned most of your career for lower taxes.
He walked away from health care. It could happen again.
All right, Adam, Dave, thank you very much. Let's get a little more intel on that and the feud that we are watching right now between President Trump and Senator Bob Corker.